Welcome to today's edition of The Good, the Bad and the Ugly, especially curated from the world of economy and business today. I'll start with the good. The Telecom Regulatory Authority of India plans to use blockchain to reduce the incidence of unsolicited calls and messages to their consumers and subscribers. The TRAI has issued a draft paper for which it has invited public response and feedback by June 11. Cryptographed blockchain will be used to co-regulate businesses as well as the subscribers and people they call. In such calls, blockchain will ensure that only those companies and their people who are authorized to access a consumer or subscriber data will be able to access it, and only for the duration that they need to. This technology will also be integrated with the TRAI's Do Not Disturb app that it has launched recently. Even political parties must get a subscriber's consent for them to send messages to those individuals. Nearly 30 billion unsolicited calls and messages are transferred on Indian networks on a monthly basis. Any attempt to regulate and curb this is good for the consumer as well as the businesses. And now the bad. India's interest rate cycle may be taking a U-turn for the worse. India has seen almost 2 years of rate cuts one after another, and then a pause in rate cycles since August of last year. However, now with petrol and diesel prices likely to cause a significant impact on inflation, the RBI in its June 6 meeting is likely to increase interest rates. Hawks have already begun predicting a 0.75% increase in the interest rates in the coming 12 months. Meanwhile, the bond markets have predicted a 25 basis points hike in the June review meeting and another 25 basis points in the August meeting of RBI. Even though this may be essential for economic stability, it's bad news for both corporates and individuals. Corporates will have to bear the brunt of higher interest rates and impact on their cost of operations, and individuals will have to pay a higher rate of interest for car loans, home loans as well as personal loans. Overall, higher rates of interest in the economy also slows down the economy. This is what makes this bad. And now the ugly. This is the flip side of the unprecedented digitization India has seen in the past few years. In just the last 1 year, 1 out of every 5 individuals in the age group of 27 to 47 has reported a digital banking fraud. At the rate of 18%, this is the highest incidence of digital banking fraud reported by FIS in all the countries that it has surveyed. The fraud in Germany, for instance, was just 6%, and in the UK it was only 8%. Such high rate of digital banking fraud indicates the existing vulnerabilities in our banking system. It also gives greater opportunities to fraudsters to hoodwink the unsuspecting. This is what makes this ugly. If you enjoyed watching this content, please subscribe to the Business Today YouTube channel and also like us on Facebook. Our Facebook page, www.facebook.com/businesstoday. Follow Business Today on Twitter India at BT_India and subscribe to our YouTube channel Business Today India.